Tom and Jane have a £2.5 million estate and a big inheritance tax problem. But there's one clause in their will that changes everything. Add it and a chunk of their home's value drops out of the tax calculation completely. We're talking a £40,000 saving from a single paragraph. It works because of how a house can be jointly owned between a person and a trust. You can't sell half a house on the open market, so its value gets discounted, and that discount is money that simply falls out of the inheritance tax sum. Let me introduce you to Tom and Jane, married, 3 kids between them, all get on, and an estate worth £2.5 million, which means a serious inheritance tax problem. Here's the first trap most people never see. Once your estate goes over £2 million, you start losing the residence nil rate band. Under the current rules, £1 of allowance for every £2 over. On £2.4 million, they lose it completely. So step 1, they bring the estate down. Gifts to the kids, their annual exemptions, surplus income given away, and slowly they pull it back towards £2 million. But here's the clever bit, the clause in the will. When the first one dies, say Jane, before everything passes to Tom, a slice goes into the discretionary trust. And you don't fund it with cash, you fund it with a share of the house. Why? Because the house is now co-owned, Tom and the trust, and you can't sell half a house on the open market, so it gets discounted, around 15% on the first death, based on current HMRC practice. That means a bit more than the nil rate band, $325,000 drops clean out of the tax sum. Then Tom dies, years later. His share is co-owned too, discounted again around 10% on the same basis. Add it up, over £100,000 of house value gone from the calculation, a saving of roughly $40,000 based on the current rates, from one paragraph in a will. And here's the beauty of it. It also drops Jane's $325,000 out of Tom's estate, which can pull them back under the £2 million line. So they keep the residence nil rate band too. Turns out they don't need the clause, the trustees just close the trust down and pass everything straight to the family. No harm done. But if it's not there, you can't add it after death. And this isn't only for big estates. If yours is around $1 million or heading past it, this matters to you too. Comment clause and I'll show you how it works for your estate.